With the booming blockchain industry, it's hard to know what to expect from Ethereum. As it grows and expands, many are wondering what its future will be. Let's take a closer look at the technology behind this cryptocurrency and its community. We'll also look at its price and growth rate. As of November 2018, the Ethereum network experienced growth in both the number of unique addresses and the number of chain transactions. Its number of unique addresses crossed 50 million and the rate at which these new addresses were created increased as well. In March 2018, the network was stable at 50 million ETH processed per month. Its growth rate now fluctuates nominally between months. The growth of Ethereum is being accompanied by a rise in institutional interest. Financial services giant Fidelity Investments has announced its intention to launch an institutional platform for crypto-based assets. This move is another positive step for the cryptocurrency industry. The growth rate of Ethereum is outperforming that of Bitcoin. If you are looking for a cryptocurrency to hold for the long term, Ethereum is the one to invest in. Its developer community is very active and helps the currency to stay competitive in the industry. Bitcoin and Ethereum are not mutually exclusive, and both have their own unique advantages. While Bitcoin has a higher growth rate than Ethereum, it is less stable compared to Ethereum. This is because it has a lower annual issuance rate than Ethereum. However, it is more sustainable over the long run, and it will stop issuing new coins. It will be dependent on transaction fees in the future to keep its network secure. Ethereum is a new type of blockchain technology that can be used to make digital versions of currency. These currencies can be sent nearly free around the globe, enabling people in countries like Africa to participate in the global economy and make money. This is a revolutionary development, as it could potentially lead to an economy without national boundaries or skin color restrictions. For many, the biggest use of Ethereum is for trading. The main goal of Ethereum's roadmap is to improve the network's scalability, security, and sustainability. The roadmap is a collaborative effort facilitated by hundreds of community contributors. The roadmap allows users to propose changes and suggest new features, as well as report bugs. The roadmap will help the community build a better system. Ethereum's blockchain is also capable of executing smart contracts. These are computer code that automatically execute transactions, and have been used for many decentralized applications. As an owner, you can transfer the ownership of a particular token using a smart contract. You can also use smart contracts to apply ownership rights to non-fungible tokens. As a result, the future of Ethereum technology depends on how it is implemented. With its flexible and robust architecture, Ethereum is becoming the network of choice for blockchain and cryptocurrency innovators. In the near future, Ethereum will support new applications and features, such as DeFi, decentralized financial institutions. As a result, Ethereum has a bright future ahead. The future of Ethereum's community lies in its ability to attract and retain users. As more users begin to use the system, its value increases. However, its value may decline in the future if competition begins to draw users away. The community has the power to decide whether and how changes should be made to the network. Ethereum's main goal is to become the internet's primary currency, replacing Bitcoin and other centralized systems. The system is open source, and developers from around the world can contribute their own smart contracts, as long as they follow the Ethereum code. The decentralized nature of the platform will lead to disruptive changes to the way we transact. Currently, the price of Ethereum transactions depends on gas fees that are sent to miners. The miners then solve transactions by creating new Ether coins. This increases the network's congestion and makes transactions slower. It also increases the volatility of gas prices. To mitigate these problems, Ethereum is slated to implement an improved pricing model for transactions. This will help it be more sustainable and future-proof. There are also plans for more updates. Despite the potential benefits of the system, Ethereum's future depends on the community. The community must first create a robust infrastructure system. Known system issues can have ripple effects throughout the ecosystem. While blockchain adoption will make many centralized applications obsolete, some centralized applications still underpin strategic revenue lines. Furthermore, implementing blockchain in the enterprise can face significant resistance due to enterprise culture. One area where blockchains are already making a huge impact is in the energy sector. A blockchain platform with an immutable ledger provides secure updates on energy data, such as market prices and marginal costs. This data can help utilities and energy companies track energy use, as well as monitor energy legislation. Recently, the Chilean National Energy Commission announced the launch of a new energy-focused blockchain project, using the Ethereum blockchain to record and manage the data. In its current form, Ethereum can process 15 transactions per second, but it could eventually hit 100,000. At those speeds, Ethereum could rival the processing power of Visa and MasterCard. But that means powerful server computers that use vast amounts of energy. The Ethereum blockchain consumes approximately 112 terawatt-hours of electricity every year, which is equivalent to the amount of electricity needed to power the Netherlands for a year. It also generates roughly 53 metric tons of carbon emissions annually. The decentralized nature of Ethereum is also an advantage, as it makes banking services available to anyone with an internet connection. The currency is also used as collateral for loans and as a form of liquidity to earn interest. Unlike other blockchains, Ethereum is not centralized, but rather is created and maintained by its community. Its network of nodes stores data on the blockchain and replaces individual servers and cloud systems owned by major internet providers. Ethereum is a decentralized, global network that runs on a distributed ledger and can carry out around 15 transactions per second. The system is expected to eventually be able to handle over 100,000 transactions per second, which would be significantly more than the combined limit of Visa and MasterCard. In order to make this possible, Ethereum needs a lot of power. The network requires 112 terawatt-hours of electricity a year to run, or about the same amount as powering the Netherlands. That means it could have a huge impact on the environment. Ethereum's blockchain is a decentralized network, which means that there is no overseer or central authority. This means that dApps can be created for a variety of purposes, ranging from gaming and chat rooms to banking and shopping. Eventually, it will become the go-to platform for businesses and individuals who wish to conduct business. The blockchain infrastructure behind Ethereum is also open to programming, which means it can be used for nearly any purpose. For example, you can transfer funds, property, debt, and equity across a network, or transfer a virtual world. However, Ethereum 1.0 has several drawbacks, and it is hard to scale because of its high number of transactions. Fortunately, the Ethereum Foundation is working on releasing Ethereum 2.0, which is expected to solve these problems and make the cryptocurrency more useful to everyone. The Ethereum merge, as the new system is known, has many critics. Many critics have questioned Buterin's intentions and the security model used by the new system. In addition to being inherently vulnerable to hacking, Ethereum's new security system relies on human behavior and could be exploited. As such, the merger of Ethereum could be a boon to ETH's future.